Did you know Brisbane's property prices surged over 10% in the past 12 months, while Sydney barely cracked 2%? And yet most investors I talk to are still pouring millions into Sydney, hoping history will repeat itself. But here's the thing. Markets evolve. What worked a decade ago won't cut it today. I just got off the phone with a developer in Brisbane who told me we can't keep up with demand. Properties that used to sit on the market for months are selling in days. So let me ask you, if you had $500,000 right now, would you rather buy prestige or growth? In this video, we're breaking down why Brisbane's shaping up to be Australia's best investment opportunity in 2025. We'll cover real numbers, insider strategies, and case studies that could change where you park your next $500,000. Stick around, because the window won't stay open for long. And check this out. Here's a snapshot of Brisbane's year-on-year price growth compared to Sydney. Brisbane versus Sydney annual price growth, 2024 to 2025. Section 1, Brisbane's 2025 market, the shift no one saw coming. You know, a few years ago, if you told someone Brisbane would be leading Australia's real estate market, they probably would have laughed. For decades, Sydney and Melbourne dominated the headlines. Brisbane, it was the underdog. But as any seasoned investor knows, underdogs can be the best plays if you get in early. Here's what's happening right now. As of March 2025, Brisbane's median house price has climbed to $883,000, with a 10.4% year-over-year growth. Sydney, sitting at $1.66 million, but it's only up 1.7% over the same period. Now, take a look at this chart. Brisbane versus Sydney annual price growth, 2024 to 2025. What's fueling Brisbane's run? One word: migration. Families and professionals are leaving Sydney and Melbourne in droves. High cost of living, housing affordability issues, and better lifestyle options are pushing people north. It's the same trend we saw in the US during the pandemic, where cities like Miami saw population booms as people fled New York and Los Angeles. And it's not just domestic buyers. Overseas investors from the UK and Canada are taking notice too. A client I worked with from London, who was initially looking at Sydney's North Shore, shifted focus entirely after seeing Brisbane's numbers. He locked in a property in Auchenflower and has already seen 5% rental yields, with projected capital growth of 7% this year alone. Section 2. Supply and demand dynamics. Why timing is everything. Here's something I always tell clients. Markets move in cycles, but supply and demand never lie. Right now, Brisbane has one of the tightest rental markets in Australia. The vacancy rate is just 0.9% for houses. To put that in perspective, Sydney's vacancy rate is around 1.7%, and even New York, after its 2022 recovery, sits at about 2.5%. And check this out. Brisbane rental vacancy rate versus Sydney and Melbourne, 2024 to 2025. Demand is outpacing supply, plain and simple. Developers are struggling to keep up. I recently spoke with a project manager overseeing a townhouse development in Marumba Downs. His words? We're pre-selling properties 6 months before completion, and buyers are lined up. Add to that, Queensland's $120 billion infrastructure pipeline gearing up for the 2032 Olympics. Projects like the Cross River Rail and Brisbane Metro aren't just improving transport, they're unlocking entire suburbs that were previously overlooked. If you've invested in cities preparing for global events before, you know the upside. Just look at how London's East End transformed after the 2012 Olympics. Brisbane's story isn't much different. Section 3. Mortgage rates and affordability. Why Brisbane wins in 2025. Let's talk financing, because it matters more than ever in today's environment. The Reserve Bank of Australia has held interest rates at 4.35% since late 2023. But major banks like ANZ are tipping a rate cut of 0.25% by mid-2025. That's big news for buyers who've been sitting on the sidelines. Here's where Brisbane shines. For $500,000, you can purchase a freestanding house in areas like Clontarf or Marumba Downs, properties with real land value, not just a high-rise unit in an overbuilt CBD. In Sydney, that same $500K gets you maybe a one-bedroom apartment in Parramatta. And even then, you're probably taking on a $200,000 plus mortgage at 6.5% interest. Now take a look at this side by side. Brisbane versus Sydney mortgage affordability, $500,000 investment comparison. And the rental yields? Brisbane's averaging 5% in key growth areas, compared to Sydney's 3.5%. If you're an investor looking for cash flow, that's a difference of $7,500 annually, not to mention Brisbane's lower property taxes and land levies. I spoke recently with Sarah, an investor from Toronto. She was shocked at how much further her budget stretched in Brisbane. She bought a duplex in West End and is pulling in $30,000 a year in rental income after expenses. Section 4. Government policies. Friend or foe? Policy risk is one of the things keeping Sydney investors up at night. In New South Wales, there's growing momentum for reforms around negative gearing and land tax, especially with housing affordability a hot-button election issue. Some proposals could see investors facing higher annual levies or reduced tax offsets on rental losses. Dr. Nicola Powell from Domain recently warned these changes could have significant cooling effects on Sydney's investor demand. Meanwhile, Queensland is playing a different game. There's no vacancy tax in Brisbane, and the land tax threshold is higher, $600,000 before you start paying 1.7%. Plus, first home buyers are benefiting from the first home guarantee, slashing deposit requirements to just 5% without lender's mortgage insurance. Now, why does this matter to international investors from the UK, US, or Canada? 2 reasons. Regulatory certainty makes planning easier. Lower taxes mean higher net returns. As an advisor, I always stress the importance of predictable cash flow, and Brisbane offers just that. Section 5. Opportunities and risks. What's the real play? Let's be honest, every market has risks. Brisbane isn't immune. Overheating is a concern. Rapid growth can lead to corrections, especially if migration slows or interest rates surprise on the upside. Propertyology flagged this as a red flag for late entrance to the market. Supply bottlenecks are real. Construction delays are pushing completion dates out by 6 to 12 months in some developments. I had a client from New York who bought off plan in Wollongabba. Completion was promised for late 2024. He's still waiting. But the opportunities? They're compelling. Capital growth forecasts sit at 5 to 7% for 2025, according to Domain. Rental yields in Brisbane's inner ring are hovering around 5 to 6%, providing stable income even in high-rate environments. And the 2032 Olympics is already driving infrastructure spending and gentrification in areas like Annerley and Greenslopes. Take a look at this forecast map. Projected capital growth by suburb, Brisbane 2025. Section 6. Real stories, real lessons. The investor who got it right. I'll leave you with a story from a client of mine, David, a surgeon from Melbourne. In 2022, he had the option of buying a unit in Sydney's Inner West or a townhouse in Brisbane's Carina Heights. He chose Brisbane, $520,000 in 2022. Fast forward to 2025, it's worth $670,000. He's generating $32,000 annually in rental income with minimal vacancy. Meanwhile, his colleague who went with Sydney bought for $950,000 and is struggling to rent it at a 3.2% yield after covering $20,000 a year in land taxes. David told me last month, "Honestly, I wish I'd bought 2 in Brisbane." Section 7. Actionable strategies for high net worth investors. So, what should you do if you've got $500,000 to invest in 2025? Option 1. The growth play. Buy a $600,000 house in Clontarf or Marumba Downs. Rent it at $600 per week. Pull in $31,000 annually. and ride the 5 to 7% capital growth. Refinance in 12 to 18 months when rates drop. Option 2, the hybrid hedge. Split your capital. Put $250,000 into Brisbane for high yield, high growth, and $250,000 into Sydney's blue-chip areas like Randwick, if you're seeking stability. Diversify your portfolio while still capturing Brisbane's upside. Option 3, rate optimization. For larger leveraged plays, buy points on your mortgage. Pay 1% upfront to lower your interest rate by 0.5%. Over 5 years, that could save $30,000 to $50,000 depending on your loan size. And if you're watching this from abroad, US, UK, Canada, remember, Brisbane has no foreign buyer tax surcharges on new properties, unlike Sydney or Melbourne. Section 8. Final thoughts. Why Brisbane should be on your radar now. Let's take a step back for a second. If you've stayed with me this far, you already know that Brisbane isn't just a maybe anymore. It's a market with serious momentum, and savvy investors are already positioning themselves to capitalize. Let's quickly recap the key takeaways. First, Brisbane's 10.4% annual price growth isn't just a blip on the radar. It's driven by real demand, backed by interstate migration and $120 billion worth of infrastructure investment. Second, the rental yields in Brisbane's prime suburbs are outpacing Sydney, averaging 5% or more in places like West End and Auchenflower. That's reliable cash flow in a world where stability is king. Third, government policies in Queensland are still investor-friendly. Lower land taxes and no vacancy taxes mean more of your money stays in your pocket, whether you're investing from Melbourne, London, or Los Angeles. And finally, Brisbane's got the Olympics factor. Just like London's East End pre-2012 or Barcelona before '92, we're looking at a decade-long transformation. Miss it now, and it might be another cycle before you get this window again. And check this out. Here's a quick snapshot of Brisbane's forecasted property growth leading up to 2032. Projected capital growth. Brisbane 2025 to 2032. Section 9. Why you should act now and what happens if you wait. Look, I get it. Making a move in a shifting market isn't easy. But here's the deal. Waiting on the sidelines often costs more than jumping in early. I had a conversation last week with Michael, a high net worth investor from New York. He sat on the fence about Brisbane back in 2023, thinking prices would soften. Fast forward to today, and the property he was eyeing in Marumba Downs, it's now $150,000 more, and he's kicking himself. His words, not mine. Sometimes the biggest risk is doing nothing. If you're watching this video, odds are you're not here to do nothing. Brisbane's window of opportunity is open, but it won't stay that way forever. Section 10. What's next? Your move. So here's my question for you. If you had $500,000 today, would you invest it in Brisbane's fast-growing suburbs, where demand is red hot and capital gains are climbing? Or would you stick with the familiar but slower Sydney market? Drop your thoughts in the comments. I'd love to hear your strategy. Do you agree with my analysis? Disagree? Let's have the conversation. And if you found this deep dive valuable, do yourself a favor. Hit that like button. Subscribe to EstateScope for weekly market insights that could shape your next big investment. And turn on notifications, because when this market moves, you'll want to be the first to know. Remember, smart investors move early. Don't let the next cycle leave you behind.